Good afternoon, everybody. It is Tuesday's Market Situation Report, or SITREP, here at Top Gun Options. My name is Matthew Buckley. My call sign is Wiz, and as we predicted with this short squeeze last week, we're going to head back down here to test this 50-day moving average. Currently hovering above it. S&P's down about 15 points right now as we get ready for our 1 o'clock primary live trade brief. But it's going to be interesting to see if we hold this here. Some back and forth on trades, some other stuff coming across the wires. Yeah, just kind of, we're wallowing around here, but we really do need to find some support. Again, this big move last week was a short squeeze. A lot of people were short here right at this 50-day moving average. And then we got the, hey, maybe we'll talk in October about trade, rip your face off rally. A lot of shorts got squeezed, had to buy to get out of those positions. And then, so we're going to retest this. Yesterday in our weekly options brief, put on a bear call spread on the S&P 500 out to Friday, threw it up there at the 3,005 level. That's already up about 54% in a day, $975. Also have a bear call spread on FXI. That's the iShares China ETF, down about a couple $100, but I think this is a great looking trade out to Friday. Let's take a look at the chart of FXI. Like I said, it's the iShares China large cap ETF. And right there, went right through the 50-day moving average, and I think we're going to come back down and test that. So the 50-day moving average is right there around, what, 40 and some change, and I think we're going to give a little bit of this back by Friday. All right, so let's kind of get into what's going on here. Obviously, I've been covering for the past week or so that the Chinese, in my opinion, have made overtures to the president about negotiating on trade. Is for what? Because they want to have a high cover on Hong Kong. They, this, hey, we might have a breakthrough this round. It's absolutely no way in hell that's going to break through. The Xi Jinping says he was talking to Prime Minister Abe from Japan on the sidelines of the G7 summit. And you know what he said? I can't trust this guy. I can't believe what he says, right? Once the negotiations began, the U.S. side said that Huawei is not a trade issue, but a security issue, and did not deal with it. Okay. According to the Chinese foreign ministry, Xi had a phone call with Trump on June 18th, during which he expressed China's hope that the U.S. can treat us in a fair manner. And then he also, if we're complaining about China subsidizing their companies, take a look at, he pointed out Boeing. It's a great point here. So, but here's kind of the major takeaway here. But with no mutual trust between the two leaders, a major concession by Xi seems unlikely, making a prolonged conflict between the United States and China almost inevitable. It's here, folks. And like I said, they're trying to play nice with Trump, dangling this whole, hey, do you want a trade deal, especially in front of, your reelection here, or not? Let's make a deal. And I think they're playing this spectacularly well. Kudlow sees long road to resolution in the U.S.-China trade dispute. This was on Friday, folks, and this really didn't get what the attention it should have gotten, saying more or less, hey, man, the stakes are high. We got to get it right. And if that takes a decade, so be it. What? And then closing out the bottom here, he said there are far-reaching consequences for the dispute that could last 50 to 100 years. That's just not good. So I don't know if Mnuchin and Kudlow have switched roles, good cop, bad cop here. But yesterday, Mnuchin, hey, we have a conceptual agreement on enforcement. Right, of this, any agreement needs to have enforcement mechanism. Otherwise, it's not going to be worth the paper it's written on. But obviously, we need some sort of enforcement mechanism. So a little bit positive, and then he kind of had to back clean up with this. He also had a warning: President Trump has no problem keeping his heavy tariffs on if a deal can't be reached. A lot of moving parts here, folks. But global markets went a little bit lower. We have an ECB meeting coming up later in the week where they're just going to party on, Wayne, party on, Garth, and print money again. And I'm sure we're going to hear from the president when the ECB acts like that. Jerome Powell spoke last Friday overseas in Zurich, and he said, hey, man, don't things are okay, things are good, and we don't see a recession on the horizon. So kind of telegraphed that they want to do a quarter point rate cut, which we predicted this back here, folks, that the Fed could only let the market down, and I'm saying it again here. I think the Fed can only let this market down, so be ready for a sell on the news event on September 18th. Okay, just kind of a darkened mood out there with investors, all the institutional folks and hedge fund guys that I talked to. Yeah, it's just kind of this, you know. Americans haven't been this downbeat about stocks since Trump was elected. This really kind of left its mark here. This volatility, we had a blast. We had, it was a 92% hit rate in August. Very, very profitable, easy for me to say, month in this craziness. We love craziness, right? As options traders, we like the volatility. We like the uncertainty. And man, that was uncertain. But the issues that caused this really haven't been cleared up. We're rallying on the fact that we're going to go into our 13th round of talks with the Chinese, and it really doesn't look like Xi, at least talking on the sidelines with Prime Minister Abe, is too bullish on doing a deal with Trump. So this is interesting. And remember, this time last year, as we got into last fall, what happened, man? October, November, absolute implosions, right? Remember Jerome Powell doing his job, and I applauded him for it, talking about raising interest rates October 3rd. We absolutely imploded after that, and and the rest is history. So a lot of moving parts here. Like I said, we're having fun. Two good weekly options trades on, and also in this portfolio we have a good-looking XLY bull put spread that we placed. What was that? A couple weeks ago, 2 weeks ago? Yeah, 2 weeks ago. It's up 93%, almost $2,000. So I'm going to look to get out of this trade today. XLY is looking good. Remember, XLY is the select spider consumer discretionary, right? We trade this in our solo Amazon live trade brief every Monday at 3 o'clock. So good looking position there. And then let me go with Amazon. Amazon, we put on a bear call spread yesterday in that brief, and it's head lower here as well. So, and I actually put a bear call spread on the XLY. So two bearish trades that I looked to get filled on yesterday are looking good today in solo Amazon service. Okay, all right, guys, I got to get going. Have a great rest of your day. Happy hunting. Make sure you hedge, and I'll see many of you at 1 o'clock for our primary live trade brief. We'll see you.